Hey guys, welcome to another video brought to you by Total Control Traders. In today's video, we're going to cover, same as usual, the market, request tickers, hottest tickers. However, what's a little bit different is today was our semi-monthly accountability check. And for those of you that don't know what it means, is basically the accountability of my personal trade call out checkups, to make sure that I'm holding myself accountable for those of you that are in the trading room, to make sure that everyone is winning as a team. Now, let's take a look at this. This is our website, totalcontroltraders.com. In here, you will see, if you scroll to the performance tab, you'll see first is the account with the performance last 12 months, as well as all of our semi-monthly accountability checks. First one starting December 22nd. Now today we made a new high, as SPX made a new high. 90% success rate. 18 out of the 20 callouts in March so far has all been correct. So 2 of the 20 were incorrect. First being snow, and second one was within the day, entered and then exited on the same day FSR. And that was either yesterday or Friday or Thursday. I can't remember which day it was. But that was our last one, and it was the highest it has been. One before that, given the market condition, 76% success rate. I think that's decent, given what the market was doing. Then the track record before that, 79, 83, 88, and 80%. So far, we're averaging at, I think it was about 82%. 100 and out of the 146 callouts that we've had in the trading room, in our chat community, whatever you want to call it, out of the 146, there has been 119 correct. So average of the last 3 months so far has been 82%. And just to give you guys a glance of what that looks like on our trading community, in here I will have my took profits on Fubo, for example, today, entered Apple, entered BABA, entered Fubo kind of things, and then took profits at APHA, took profits PLTR on the specific call, but also which one to remain and whatnot. So through the history of this, it's all out there. Well, not out there, but in the trading community, it's all there. What the histories look like, what the trades, when they were entered. But yeah, I'm quite happy with the results, given that this is the first 3 months that we have ran for the semi-monthly accountability checks. So far, not bad. I mean, there's always room for improvement, but of 146 trades, 82%, quite happy with that. All right, so that's the marketing side of me talking. For those of you who are interested, make sure to check out totalcontroltraders.com. Also, on the Twitter account, I might as well show you guys this too. On the Twitter account, oh, not that one. One sec here. Right here. All right, so on the Twitter account, what I try to do is every day I'm going to show or call out one individual ticker that is top of play for me. However, today ended up calling out 2 or 3. One being BABA. APHA, this was a follow-up. FSR, this is a call out to make sure that, if you wanted to play bear or if you are in bull positions as a caution kind of thing. Wayfair already in this play, but looking for follow through. So today I had 2 call outs. One is Apple, one is BABA. Generally, I try to do 1 call out, top of the day, play per day. Then from there, just market updates, important notes or videos that I shared here. Make sure to check us out at tctraders_. All right, that's it for today's marketing. Now let's get into the fun part. Same thing, we're going to start off with NAS. The part that's been, I wouldn't really say moving the market anymore, in the sense that the market is moving synchronized, back to the synchronized environment, which is nice. You know, with NAS, I was saying to the trading community that what we're anticipating is potentially a inverse head and shoulders. Now that is still in play. It's depending on where we're making that neckline. However, what's happening today is this previous resistance that was looking to be neckline, I was looking for a little bit more of a pullback on this, potentially around that 0.5, maybe even the GP, because there's a key previous resistance support here. Around that GP, that would be awesome. However, the market wanted to be a whole lot stronger than ideal. So, well, now it's even more ideal for both. So with this, previous resistance has been keeping us down. 1, 2, multiple here, another multiple here. This trend line, we broken bull right at the end of the day. You can see end of day, 1 o'clock. Is this right? Yeah, 1 o'clock, we shot over it. However, the interesting I'm just noticing now is, let's see, volume is very low. This 1 o'clock volume today is very, very light. On the 30 minutes, I thought it was bigger. Even the 15-minute, the volume wasn't there. Okay, so something to be a little bit more cautious about. I wasn't exactly watching the market towards the end of the day because things were going the direction that I was anticipating based on the early market today. So early market today, let's go over that. First 5 minutes, I was looking at this potentially forming a lower trend line, and we saw that with the dip buying going up, then rejection from this previous trend line, a very clear rejection. Then we came back down, didn't touch the lower trend line. So at this point, early on, actually, it was early on in the day, I said the day is going to be determined on, you know, if we get bought up here, there's two possible scenarios. One, the day is going to be bullish. Second, the day is going to be choppy. Well, you know what? Ended up both scenarios played out today. So beginning of the day was choppy. Then towards the end of the day, right at 9:35, am I looking at the right chart? There's like zero volume here. Okay. I think it's something wrong with TradingView because I don't think I've ever seen volume so low that it doesn't show up. Regardless, breakdown, zero follow through. From there, straight buy up. Not only a V-shaped recovery, but going beyond that. Straight into the trend line where we saw slight rejection. Didn't even come back to back test this inner wedge that we were watching. And then buy up towards the end of the day, breaking through. So where are we going from here? Now, essentially on the daily, I don't see a clear inverse head and shoulder yet. And on the daily, we do need a higher low. 7 straight days. It's not straight buying, but this is one single trend. Okay, if we were to check out the 4 hours, it's a little bit more clear that you could call this inverse head and shoulders right here, but regardless, it is not clear. So if you're drawing like a trend line kind of thing, You see how bounced, broke down, bounced, one close under, immediately bought up, and then bounce again. So this is one single trend, the way that I look at it. Daily obviously not being clear, so we're gonna need that daily, even the 4-hour higher low, to make a clear higher low for that right shoulder. So be cautious, but ultimately with the break of this trend line early on, with this potential neckline that I was looking at early on, I am anticipating bullish market, regardless of SPX or NAS. Now NAS is going to be pretty crucial in my opinion because of the sector rotation. We're going to need NAS to see bullish action to help SPX reach the targets that we have set. Now one thing notable to watch for is I came across this. I'm not going to take credit for it, but it's definitely something notable to watch. QQQ over IWM. Okay, QQQ over IWM. Let's look at the weekly chart. So on this, remember the sector rotation that we're talking about? This is very clear. All right, previous high resistance to the current rejection. Previous high, 20 years since 2000, when the tech bubble burst, and it's straight downhill. Now we're seeing something similar. Since then, we have grinded up, and rejecting from that same high. Now from here, where are we looking? The weekly does need a lower high. Last time we touched was January 4th. We touched that weekly 8, and then we touched again on January 25th and February 1st. Then it's been a straight sell from there. We're gonna need a weekly lower high to touch that weekly 8 again. And let me remove this. We're gonna need a weekly lower high to touch the weekly 8 again. So from here, I am anticipating a little bit more bullish action, at least this week into next week on NAS. Then from there, I don't imagine our sell-off is done yet. But let's take a look. So since the bottom of this into the top of this run, where are we right now? We are right near that 0.382. Broke down under a little bit. And then would the GP make sense? So there was previous resistance support in the GP. There was also, let's do this. Okay. So it doesn't line up with the 0.5 exactly, but the previous support that we saw bounce from somewhat almost lines up with that 0.5, where we on the way up also saw resistance, broke over support. The 0.32 doesn't have any notable level that I can see aside from maybe the back test. But something, this is a chart that you should be keeping on watch. Now let's see, if we do monthly, this would be easier. Right around here. Not seeing a zone. GP definitely has a zone going there. So if we were to draw from previous resistance, that might not work. Let's give this a try. Let's see, does this work? No, because we broke over. Actually, yeah, this might work. Rejections, broke over, breakout, fake out, came back down, rejection again, finally broke over, back tested the lower of the zone. So this zone makes sense. GP, watch for that. Until then, and at least until this 1.22 mark, I don't imagine the rotation to be done. However, do notice or do note that there is, oh, this is interesting. It's actually a trend line. We are bouncing from the trend line on the monthly right now. Monthly is getting really extended, so tech should see some upside before the next leg down. Right now, in my personal opinion, I imagine tech is where the bounce should happen. Even though SPX, there is lots of upside to it as well, especially given that we have broken to new highs today. Congrats, SPX bulls. Closed at new all-time high. Closing of 39.66. Target remains around that 4,040.20 mark. It has been decreased from 40.90 due to the most recent pullback, but we are looking at around that 40.20 mark. There's a lot of zones around there. 4,000 psychological, 40.20 the most recent move, 40.30 is the previous bigger move, and then 40.50 is the 1 to 1.272 extension target of the previous big move. So it's going to be somewhere around there, 4,000 to 40.20. That would be where I would put the mark for the target, and then we will reevaluate as we get closer to that mark, that target, see whether pullbacks are happening or things like that. But congrats, SPX bulls, new all-time high close on OPEX week. My goodness, we are extended from the daily 8 now. Know that. Very notable extension from the daily 8, especially given where we're closed today. Into the end of the week, I would anticipate either a bull flag or some sort of bear action that we are already starting to see today after hours. Dow, no doubt, yep, all-time high again. 1-to-1 extension target has been reached from this low to the higher low. 1-to-1 extension target, we are seeing a little bit of a stall from there. Which one is this one from? Okay, so this is a leg 3 target. We are potentially looking at an extended run into that 34,194 to the 34,445 zone. That would be where I'm looking at for the Dows. Blasted through that 1-to-1 extension target. Chart looks amazing. All right, so that's it for the market. Looking for higher low relatively soon, especially given where the SPX is sitting at from the daily 8. And NAS, we're going to need to see where that neckline forms to have a guideline. Then also see, actually, let's do a quick fib drawing. It actually hasn't changed now that I look at it because we haven't crossed this Thursday high yet. Monday, Friday, Thursday. Yeah, Thursday high has not been broken. So the fib has not changed. GP, most ideal, bulls must hold zone. Let's move this forward a little bit. And then move this backwards. All right, that's it for the market. Next ones up are the hottest tickers. First one. Now that I accidentally clicked it, I sort of want to see it. US dollars. Nothing very notable, but you can see a trend has been changed to potentially to the bulls. We're going to need to see the further action into the next day or two. See if this forms a head of the head and shoulder pattern. So nothing notable. All right, BTC. Big bear divergence on the daily again. The last time we formed it, we retraced back to the 0.5. Basically to the penny. 0.5, let's, just out of curiosity, let's take a look at this. 0.5. It's very faint, but you can see it actually was retraced under the 0.5. Alright, so yeah, last time we saw a daily bear divergence, we retraced to a 0.5, so the market on BTC is still relatively strong. This time we are seeing a little bit weaker of a bear divergence. Let's see what the market's going to trace to. We already traced and bounced from the 0.382, holding that 0.38, holding that daily 8 so far. Would imagine further downside. This 0.5 actually makes complete sense. It does line up with the previous resistance. No support, resistance again, and then blasted through. So triple resistance price action at 21 or 52,174. Lines up with the 0.5. Let's see the reaction around there. If that were to be lost, still anticipating a bull flag on the weekly and on the monthly. So regardless, chart is strong, just depending on your time frame. As of right now, on the shorter time frame, daily or shorter, maybe even weekly, I would not consider holding BTC. Next is Tesla. Tesla saw some follow through today, pulling a little bit away from the daily 8 and decreasing bull volume. No confidence there. Why is the chart so messy? Let's do. Okay, so the bounce from GP, I want to keep that. Yeah, we don't really care about these resistances up ahead. There are things to worry about before then. Rejection. Okay. I still don't think this trend line is all that worthy of keeping. One rejection, nothing here. Maybe two supports and then another support. But yeah, let's leave it. Channel, more important. We did see a bounce there lining up with the GP. So from here, we're stalling around that 0.5 again. Based on the bull volume, even if we were to see follow through, I would anticipate a rejection around that GP upper trend line area. From there, we'll be looking for a higher low. Let's see what tomorrow brings first. So this chart is still relatively strong because essentially we did bounce from that 0.382. If you're looking at the weekly, weekly, since the beginning of the run, $70 to the high of 940 cents. We held that 0.382. The chart is still strong. Weekly, we are trading under the weekly 8, so something to note. On the daily, probably going to be looking for that higher low soon before, if we're looking to make a higher high, gonna need that higher low first. Next, PTON. Relative weakness today, but we did hold that 0.382 from the bounce so far, so the chart is looking decent. And candlestick is not bad. It's not at the top or the bottom of the trend, so nothing notable. Low bear volume, middle of the land, middle of nowhere, the no man's land. No trading here. Gonna need some clear direction first before we place that next trade. Next one, PLTR. A little bit of consolidation today. However, we did see relatively low bear volume. That is great. So we're rejecting from the 0.382 of the drop so far. That's a little bit more bearish because essentially you want to see a break. Ideally rejection from 0.5 for the GP. So with a rejection from the 0.382 so far, chart is looking a little bit weaker. There is no volume. We are still looking for the same play, the big bull volume pop from back here. Looking for that follow through. However, 4 hours, we do need a higher low. So from here, let's see where we make that higher low. Ideally, I want to see a bounce from 0.5 or higher. Does it line up with anything? a little bit. 0.382 works better. Let's draw a no, because we already have a zone down here, a zone up there. This is a very mini zone that is kind of insignificant. So what I'd be looking for, ideally, on this 4-hour higher low, I want to see a bounce around that point. Oh, that was weird. I want to see a bounce around that 0.382, which is in this previous. We can see support, key supports, more supports and rejections. Okay, then become more supports, and also up here. So this is a very clear zone, except it's so small that I don't really want to draw it. It's going to be around that 24.56 to 25.16. Let's see a bounce right around there for the 4-hour higher low. Next one, AAPL. All right, so moved AAPL Apple to the hottest tickers because Apple, woo, congrats Apple bulls. Now, of course, you know, you could always have an amazing entry on this crazy daily bull divergence. But did you want to take a risk? You know, sometimes you risk it for the biscuit. If you did, good for you, because this is obviously paying off so far. You would see a 6.57% return on Apple so far. That's pretty okay for Apple, I would say. Apple, it is a blue chip, so it doesn't move nearly as much. Now from here, I did enter Apple today, and I'll give you the reason behind it. Aside from the daily bull divergence, we did see increased bull volume as well as a break over this trend line that's been keeping us down. So multiple rejections from back here, multiple rejections again here, and then one more rejection here. Now we are breaking over it on decreasing volume. So tomorrow we're gonna need to see that follow through, but I don't imagine, especially with NAS needing a higher low, as well as SPX needing a higher low relatively soon, we could see a run into this key zone, very tiny key zone, before the rejection. But on the hourly, here's what I was looking at early on today. 7:30, big bull volume came in, followed by low bear volume. And I think I entered around one of these two candlesticks. Let's see, 30 minute. Yeah, it's one of these three candlesticks. I saw the low bear volume sustained beginning of the day, decent bull volume, then low bear volume, just over half of that first half an hour, then followed by another bull action, price action, followed by even lower bear volume, and we touched the 30-minute 8. Then from there it was just straight grind up into the end of day. Huge bull volume came in. So Apple looking amazing. We broke over that trend line. Now what I want to see is, because we haven't seen an immediate backtest yet, there's still a chance for it tomorrow. But what I want to see is a pull away from this first. Maybe even touch the 0.382. Maybe that's a bit too far actually. Let's see. The most recent drop. Alright, so we're right around that GP right now. If we were to see a rejection from here tomorrow, I want to see a back test of this trend line before a next leg up. So chart is looking amazing for continuation, especially on the daily. This is potentially looking at a daily reversal relatively soon. You could, let's see, 4 hours. I think we got it. Yeah, 4-hour reversal has already been obtained. Higher low, lower high, lower low. No. Lower low, lower high, lower low, lower high, higher low into higher high. So 4-hour has been obtained. Now we're looking at the potential for daily trend reversal. All right, next and last but not least on the hottest ticker is Wayfair. So we are still looking at this chart. Oh man, it did not close as ideal as I hoped. So on the monthly, we are seeing this is going to be increase. Ideally, there's still 15 more days left. So 2 more trading weeks, 10 more trading days. We're likely looking at an increased bull volume here. There is going to be a monthly bear divergence potential, but we're going to need to break over this trend line as well as the wedge. Increasing daily bull volume, strong price action. 1, 2. We are still missing a third touch on this lower trend line of the outer wedge. The inner wedge has already got more than 3. Technically 2 periods, but wait, 1, 2, 3 periods. And then the top 1, 2, 3 periods as well. So today we had a breakout fake out so far, and that's why we have the outer wedge as well as the inner wedge. Until the outer wedge is broken bull, there is no full bull confidence yet. Let's see that increased bull volume tomorrow continuation to bring us higher high, breaking the wedge, negate the bear divergence, the potential bear divergence that could be setting up right now, as well as breaking this key resistance of 343. That's it for the hottest tickers. Whoa. Okay, let's speed this up. Next is the requested tickers. First one, FSR. So on the daily, now there's a little bit of questions about this because I posted it on Twitter today that, on the daily we are looking at a potential of a head and shoulders formation. This being the shoulder, this being the head, this being the right shoulder. This is a daily pattern. Okay, so with the daily pattern, what we're looking at is a daily follow through. It's going to take time for this to play out, but there is a potential. And if we were to look at let's do this. Let's just pull it up. Let's just pull it up here. Okay. There we go. So FSR, high potential of head and shoulders pattern follow through. That's a keyword. I probably shouldn't have abbreviated that. High potential of head and shoulders pattern follow through on the break of the neckline. Okay, so we are looking at if this trend line is broken and is looking a potential of breaking it today. If this trend line was broken, there is going to be bear follow through because of this head and shoulders pattern playing out. Now, if we're to zoom into the closer time frame, when I send that message, what you could alternatively be looking at is bulls definitely going to want to hold this trend line, because if this is broken, there's going to be more bear side to come. And if bulls were to hold this, that is their last defense zone. So that could be a bounce play right there. Now let's look at the closer time frame. Right. Oh no, it's over here. Okay. I'm looking at it. We didn't lose it. All right. So we were looking at this, on the closer time frame. I sent the message right about here, somewhere around here. And I was saying that if this neckline is broken, then we're going to see follow through. So you see this trend line bounce, bounce. And right at the trend line, we saw a temporary relief bounce. Two ways to look at this. When you saw my message, this was a golden play for a bounce play. However, the keyword is bounce. This is going to be a shorter term trade that you're looking for, just the bounce play. Now, as soon as you saw the lack of follow through, where did it even bounce to? It bounced to roughly the 0.5, and then you see a triple rejection. Oh yeah, triple top. So 2286, 2285, 2286. That is your exit signal. From there, we saw bleeding through the day, breaking under the trend line, then the last attempt to save the trend line. Then big bear volume came through, but unable to push it down. But with this lack of bounce, I am anticipating to see a follow through on the head and shoulders pattern. Tomorrow, into the day after, see if we get the break of the trend line. If we do, we'll be looking at further downside. And the downside of this, yeah, that doesn't look too much. Okay, so the target of this head and shoulders pattern, whoa, 1-to-1 extension target, we are looking at 1269. However, do note that the key support is around 1470. There is a key zone right around here, so $14.32 to $15. Would anticipate some sort of a stall or a bounce there. But yeah, 1-to-1 extension target. Do understand that is a potential. 12.69 once this neckline is broken. All right, next one is BBBY, Bed Bath & Beyond. Now I was looking at this. It's still essentially is a ABCD pattern. A, B, popping up, then forming a C, a higher low, and now we're potentially looking at a D, meaning that we are looking at a lot of same with a lot of the other Wall Street bet names. We could potentially be looking at a new all-time, nope, not all-time high, a new 52-week high. Yeah, don't think it's gonna be all-time high. Okay, so let's see if this is ABCD pattern. Let's see what the target would be. So low target, next one up, $60. Today, a little bit of a caution. Red flag, did not break over the new high, but we did close near that high of day. And volume looks decent. Decreasing bear now followed by increasing bull with no divergences. So chart actually looks really good. However, I decided not to go back into the play. So we played this bounce here. This was an amazing bounce. It bled out with volume. So that was a little bit of a red flag for me. You can see the same thing. Pop, bled out, pop, bled out. This time's a little bit different. There is no real pop here. And I'm looking at the bull volume. That's the main reason why I haven't entered yet. If you look at this, it's quite interesting because the bull volume has just been, or the overall volume has just been consistently decreasing. So if we to look at the 4 hours, no, let's do 4 hours. It's choppy. Volume is not giving me too much of a clear direction. So unless this 3306 is broken on volume, it's a little bit of a sketchy play. Keeping an eye on it though. Let's see what the price action for the next couple days look like. I imagine with OPEX week, it could see potential of chop. Next, TLRY. TLRY right at that resistance trend line. Previous support, well, support resistance. Let's there we go. So let's see, not really anything here, but support, and then clear support here, another support right here, then became resistance as we gap down. So resistance, resistance, no support, resistance again. Wow, look at this triple confluence though. Wow, look at this, crazy. Okay, and then resistance again and again, and now today we are seeing another rejection from that trend line. It is not the most ideal trend line I usually draw, but it does work, especially with this chart. You know, it is a very noticeable rejection and support trend line. Keep it on your top watch. We did break over the key zone, closing back under it. No bear volume. With the talk of potential New York legalization, I would imagine further bull side to come, but not. I'm playing this through APHA versus TLRY. Right, next is GOEV. I don't know if we ever covered this chart. Okay, interesting. So it's a relatively new chart. So these price actions before were from another ticker, I'm assuming. I'm seeing a potential of a channel now that I'm taking a look at it from a different perspective. Let's see if this works. So if we were to It doesn't really work, hey? We don't know yet. It could be a channel. Regardless, we've ran quite a bit. $9. 68% in 12 trading days. Congrats, Rafaela. I think you're in GOEV. Now let's try to find you a target and an exit. Now that we know this is not a wedge, let's draw a trend line instead. And there's no trend lines here. So the bounce so far, we have passed the GP. Nothing really notable on the volume. We still haven't touched the daily 8. Getting extended on the daily 8, but no notable bear volume coming in. So we could run straight into the trend line before a stall or a rejection. So based on the current price action, this still makes sense if we're to pull back from here. The key support IPO low does line up with GP still. 0.382 doesn't line up with much except this previous support and then rejection here. 0.5 doesn't line up with much either. So instead, if we were to run into the trend line, 0.382 then would become that it makes sense, lining up with the key zone. The lower part of the key zone at 14.18. This trade is more so using an EMA as your guide right now. $4R8 is your guide. Next, blue. I'm gonna have to wrap this up relatively quickly here. All right, blue. New lows? This new all-time low? No. No, not quite. Okay. So we basically held the IPO high. There is a gap above. Weekly chart or daily chart still looks choppy. Bear volume is still there, so there is an oversold bounce that's playing out. Weekly bull divergence. Relatively strong weekly bull divergence. So big chance, a good chance of seeing this gap fill. Which is what? From the current price to the gap fill. Well, that's decent, 34.3%. That's not bad. Big bull, big bull. So let's look at the closer time frames. So we saw a daily bull divergence here as well, and that is playing out after the weekly bull divergence. So this chart actually looks pretty decent for longer term bounce play. So there is a daily bull divergence here. Then this is correcting out. Daily is getting bought up relatively quickly. Still having trouble with this zone. This, what is that? Open 33.28. Okay. All right, so this is the key zone to break. This wick, basically. We can see rejection from here, and we're closing at the low of the zone again. To have a safe play of this because you don't want to get faked out, because we already ran quite a bit from 24 to 34. That's already a 42% move. We could be looking at a 4-hour higher low that's coming in. So you don't want to be buying here and then you sort of just get faked out. There is a high potential of the gap fill, but you're going to have to wait for it. There's two ways you can play this. Either wait for the higher low, you know, determine where your high low is going to be. Let's see if there's anything. GP somewhat makes sense. 0.5, not really. So most ideal entry will be around that GP 27.84 to 28.17, and then from there, or the other play is wait for the break of this key zone at the high of 34.29 to play that gap fill, because the gap fill alone should provide worthy trade itself. 32% gap. Earnings actually not bad. But yeah, I am gonna add this to one of the top watches. Thank you, Rafaela. Let's see what this plays out as. I want to see this GP, of course. But anyways, so that's it for the requested tickers. And then from there, let's take a look at APHA. So called this out on Twitter, and as we were breaking this trend line. I can't remember which day we got in. Oh yeah, it was this day. On the break of the trend line. Next day we gapped down, and I can't remember if we added to the trade. But regardless, we are seeing some decent follow through, and then towards the end of the day, we are seeing a 30-minute bull flag right underneath that key resistance 2268. Tomorrow, I want to see that follow through and then breaking us right over this resistance. Then next one we're looking up is at GP 2522 to 2581. Ultimate target still remains at 34. It is the same thing, an ABCD pattern. That is not as ideal. I don't even actually, this might not even be an ABCD pattern. Similar, you know, A, B, C did break it down under, so that invalidates a little bit. But let's see if we get follow through tomorrow. Target could potentially be looking at up at 34. Next is ABNB. All right, so with this, we did see a gap up today, but it ended up being a doji candle. So this could very well be a, doji spinning top candle. This could very well be a reversal signal. Remember that we are seeing a decreasing bull volume. We played this from near the bottom to right around the resistance around 186. From there, it kept running and on decreasing volume, sustained but decreasing bull volume. Now from here, what I'm looking at is potential of inverse head and shoulders pattern. It is still there. It almost negated it. If it were to break this point right here, 214.10, it would negate the potential of an inverse head and shoulder pattern, because then the neckline becomes trending upwards, and inverse head and shoulder is an inverse of a bear trend or reversal of a bear trend. Next is Dash, and this one's a little bit frustrating, but remember, the same with KOSS play. We are playing this for the big bull volume spike, so it might take some time to play out. As long as the lows over here on Monday, Tuesday is not lost at 130. Actually, I think I forgot to replace my order from Friday. Gonna replace the order, stop loss under 130, easy play. You know, right now we're at 140, so that's $10 difference with a potential upside of, say, the GP, you're looking at $48 difference. Risk to reward wise is about 1 to 5, so 5 to 1. I say that's worth it. Next is BABA. Took this trade today. One last attempt at BABA. It is one frustrating ticker. For those of you that played it back here, you know, maybe you saw the head and shoulders pattern, but then there was a potential of an inverse head and shoulder pattern that did not get follow through. So thank God I didn't play any of these. I think I played it from back here and then sold it into the resistance. But this is going to be one last play because it is known to give fake outs. It is a dual traded tickers, meaning that news from both sides, US and China, would have an effect on this ticker. Now, the reason why I took this is from the pandemic low, there has been a trend line that we are finding support on, double support here, double support here. Now we are looking at a potential of a double support here again. Then from there today, once we took the trade, it should line up. That's weird. Oh, we actually lost it a little bit. Okay, but we did see some decent bull volume coming in. Lots of gaps to fill. We are filling that first gap right now, and then from there we're looking at resistance of roughly about 213, 232. Then from there, resistance of 230, 380, and then another huge gap up to fill up to the 240 zone. So this trade, low risk entry, as long as today's low is held, will not be out of this trade. All right, I think I'm gonna keep it at that today. I need to run out, but yeah, let's do a quick KOSS actually. KOSS. Daily trend is still there. Play of the ABCD pattern is still there. As long as we hold, and you can see that the daily 8 is actually above the Wednesday low now. So what you could do is begin moving up your stop. Right now where I would put my stop, haven't changed it yet, but it'll be around that under 24. So trade is still there, pattern is still there. It's taking a little bit longer, but no bear volume. So I am confident on this play, looking at new all-time high around that 136 mark. Risk to reward, well worth it. All right, that's it for today's video. Make sure to check out our website. New highs on our correct call out. And don't forget to give us a thumbs up if you enjoyed the content that we provide. And if you're looking to build that pot of gold and enjoy the content that we provide, please consider subscribing to our channel where we provide new videos daily. Also, check out our website and Twitter. Website at totalcontroltraders.com. Twitter at _TCTrades_ or TCTraders_. We offer 7-day free trials, which we can find from our website, to our chatting platform, where trade ideas are shared, charts are reviewed live, as well as my personal trade call outs, most recent result of 90% over the last half a month. 90% correct call outs. Hope you guys stay safe and be in control. Thanks for watching. I will see you in the next video.